Broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's presentation on how you can actually cash in on the current economic explosion that started once the COVID epidemic started tapering off. Of course, now we're going through a lot of craziness with it, but that hasn't stopped the markets from continuing to surge. And there's so much money that you can make during this time. And of course, I want you to keep on using whatever tools were working in your trading toolbox, but I'd like to introduce you to a very special trading tool this evening, and that is the TradeSafe Mechanical Trading System. My name's Michael Guess, and I'm the developer of that system, and I would like to show you how you can use this tool to replace subjective discretionary trading with actual automated, consistent winning results. Now, before we get started, I want to make sure that you can see and hear what I'm doing right now. I don't want you to miss anything, and I want you to be able to ask plenty of questions. So if you would, look in the top right corner of your main monitor. You'll see that little narrow vertical strip with a few buttons. That's the GoToWebinar control panel. If you will go up to the topmost button, I believe it's a left pointing arrow and it might be yellow. Please click once on it. It'll slide over and reveal a hidden window. That's where I would like you to please just type something and click send and let me know that you're able to see and hear what I'm doing. So please do type something because I need to know that you're able to ask questions. Otherwise, okay, I'm getting one response. Does that mean the rest of the group can't hear me? Let me hear from Dan and Eric and Halen and Damon. Would you all please do that? Just make a little bit of extra effort and type something and let me know that you're really here. Thank you, Halen. I appreciate it. Now, folks, this is who I am. I want to thank you, first of all, for taking time out of your evening. I know there's a lot of things you could be doing, but I want to make it worth your while. First of all, I want to let you know exactly what's coming. And that is, even though we may have all kinds of conflicting information about vaxxing, and I don't get political during these at all, I'm a trader. And as a trader, I know this economy has been really on a tear. So let's take advantage of that. I'm going to show you how you can take advantage of all this pent-up spending pressure. And I'm going to show you how you can catch the very best trading opportunities. Okay? Now, why am I qualified to say this? Well, I've got some pretty good credentials. I've been a professional day trader for over 28 years. And I founded TradeSafe, more than 20 years ago. Along the way, I've graduated over 4,000 students, and I've created a host of custom indicators and trading systems. And I'm just going to share one thing with you this evening, and that is the TradeSafe Mechanical Day Trading System. So let me go ahead and move one of my little windows around so I can see things better. One of the last things you can see here, of course, is it says that I have a background in psychotherapy. That's right. Before I discovered trading many years ago, I was a psychotherapist. And I wasn't working to try to help people who are having problems. I specialized in what today you might call performance coaching. We didn't have that name in those days. And that's one of the things that equips me to really assist my students in making sure they get the most out of this system, that they don't self-sabotage. And I'll get more into that a little bit later. Now, in case you've got to leave, and I hope you don't, I want you to know that this is being recorded, and you will receive later on this evening a special email. Actually, you're going to get a series of follow-up emails, and they'll each contain a link to the recording of this presentation. You'll also get a free ebook because you took the time to register for this event. So you'll get an ebook as a bonus. That'll be sent to you. You can qualify for it. And finally, there will be another link that you will want to take advantage of. I'll go into this at the end of the presentation, and that is you're going to have questions. More than what you can think of here. In fact, some of you probably aren't even going to touch your mouse or ask any questions, but at the end, you may have questions. I want you to know you can ask me directly, not by email, not having to type. You can actually call me up directly, and it will not be a sales call. I don't do that. I never have, and I never will. What I'll do is I will make it worth your time to get your questions answered. I'll help diagnose any problems you're having with your own trading, and I'll make sure that you thoroughly understand how the trade safe system works and maybe whether or not it'll be a good fit for you, because I don't want to insult your intelligence, okay? All right. Now, before we get started, I'm just going to spend about 30 seconds on this. I'm not going to read that boilerplate, but it's basically boils down to this. The FTC, they control the internet, and they have a regulation that says nobody is allowed to ever make any promise or guarantee about any outcome. It doesn't matter whether it's trading, it could be weight loss or something else. That's actually against the law. And I hate to see it, a lot of my colleagues violate that. They make all kinds of promises. I won't do that, but I will share with you our track record, and you will see how easy it is for you to replicate that very record. All right, so now that you know these things, you want to know, okay, Michael, well, how can I cash in? What am I going to learn here? Are you just going to pitch me? Well, here's what you're going to learn. I want you to know which type of trading tool is going to give you the best results. I know a lot of you are options traders or position traders and so forth, but I want you to know that in a toolbox, you don't want to just have one tool. You want to have more than one tool, and I'm going to introduce you to this system so that you can consider that as a complement to whatever you might be doing. Here's something else. A lot of people, they really want to be able to make the bigger money, but they just don't have a big enough account to do it. I'm going to show you how you can actually get started with a really small account, not a multi-thousand-dollar account, 25 or thousand or higher like is required typically. I'm going to show you that you can open up a trading account with just a few $1,000s and get started. Now, most of us, especially when we started out, had doubt about, is this really the best possible entry? Am I following things correctly? Am I going to get the same results as the guy that taught me? And is this the best place to get out? Because that's often the hardest part, is where do you get out? I'm going to eliminate all the doubt about where to get in and where to get out, because it is totally structured. It is mechanical. And I'm going to show you a very straightforward method for slashing your risk. You're going to be able to keep your risk on a per trade basis extremely small, much smaller than you probably thought. And then finally, I'll walk you through the 4 simple steps that get you into a trade safe trade. And then once you're in that trade, you will see, because we'll use actual live charts, you will see the automation that takes over. Because if you're going to day trade in today's markets, you probably already experienced the reality that you can't keep up with a lot of them. They're way too volatile. Now, I've said the word day trade a few times, and that might have scared some of you, and you might have already shut your mind off and said, this is not for me. I don't have time for it, or I've heard bad things, or I've tried it and I didn't like it. I want to ask you to please keep an open mind, because I'm going to show you how you can actually day trade part-time and still have consistent profits. Like I said, you do not need to sit there all day long. You do not need to replace everything you've been doing with this. This is a complementary tool to what you've been doing. And if you've got any questions, you can start typing them. For those who came in later, top right corner of your main monitor, the GoToWebinar control panel, topmost button, left arrow, click on it and it'll open up a window to type your questions. All right, now all of these steps here that you're going to learn tonight are going to add up to something that it's a bold claim, but I can back it up. This is not hypothetical back testing or any of that. These are people, my own students, who did their own trades without me pointing anything out, and they achieved an average of close to 90% winners. So if this keeps you interested, and I don't know why you wouldn't be if you could achieve that kind of record, then stay tuned. So I said part-time trading. It's really, really possible. You do not want to sit there all day long on your butt and get a sore butt and eye strain and brain fog. Because if you stay glued to your monitor, you're not going to be an effective and efficient trader. What you want is to pick your battles. Part-time trading is actually a possibility. You can be highly selective, but you got to know which of those parts of the day, which of those times during the day that give you the best conditions. And I'm going to show you a lot of that you can take away tonight and try it out on your own. I'm not going to say, oh, you got to buy the system. It's a secret until then. I'm going to give away quite a bit in this presentation. So how is it possible to do part-time trading? Well, you see that picture of the camcorder over there on the right. Okay, it has a zoom lens, and you already know how those work. You zoom out, you get the big picture. You zoom in really close, you're almost on top of a blade of grass, and you get the detail. Well, you can do the same thing with your chart settings. Now, that's not new. But the big difference is that instead of the generic chart settings that are in your drop-down menu of your trading platform, I'm going to introduce you to very specific settings, or at least a formula that you can use for whatever market you might trade, so you can get those very specific settings that are tailored for that market. This enables you to go from a wide angle view, essentially a setting that lets you see what the trend is for at least half of the day and maybe the whole day. And as you zoom in more and more, you get all the way up to that low risk surgical entry setting, as I call it. So you're zooming out and you're zooming in using very specific chart settings, and this allows you to adapt. This is made possible by ratios, like those three charts. It's the same market, but the one on the left, the biggest chart, has the wide angle view, the highest setting, and it's in a downtrend. And you zoom in 300%, and you've got your intermediate setting, the so-called dominant trend. And then when you zoom another 300% in much closer, you've got that granularity that you need to achieve a low-risk surgical entry. So how do you get that relationship? Through ratios. Well, first of all, you don't want to trade with a single chart. Avoid that one-size-fits-all. You want something that will enable you to custom tailor the way you trade so that you not only identify the trend, and there's plenty of indicators out there that identify trend, but also the strength of the trend. And I'll go into that a little more later about why that is so very important. Because when you know how strong the trend is, you'll know what the market is really capable of giving you. Okay? So I'm going to give you a formula right now. Even though some of you may trade stocks, some of you may love Forex, a lot of people, when they day trade, probably the majority of them, they like to day trade what are called the indexes. We've all heard of the S&P, the Dow, the NASDAQ, and the Russell, the big four. So I'm going to give you the settings for what are called the minis, M-I-N-I-S. And They open at 8:30 Chicago time. That's because that's where the exchange is. That's 9:30 on the East Coast, since so many people think that way. And the normal closing time was 3:15 up until a few weeks ago. And then the exchanges changed things and said, we're going to let it run until 4 o'clock. Well, I thought that was going to change my formula. But you know what? After I checked it out, it actually didn't make any difference. So here is what you are going to do. You're going to take the open at 8:30 and the traditional pit time close of 3:15 in the afternoon. That's 15 minutes after the stock market closes. The number of minutes in that is called the daytime trading session. So it's 405 minutes. Now you may say, well, why don't I just use the drop-down menu choice and set up a daily chart? Well, you really need to calculate the number of minutes, because from there you want to then find the next biggest number that'll divide into it without a remainder, and keep doing that, the next smaller and smaller numbers going down. 135 is the biggest number that divides into 405 except for itself. The next biggest number that divides into 405 is 81. And we want to keep that 3-to-1 ratio. You heard me say earlier, a 300% zoom in on the magnification. So what's 1/3 of 81? That will also, of course, divide into 405. It's 27. Now, a 27-minute chart is very close to your generic 30-minute chart setting that you see in your drop-down menu. But this one is actually much more accurate. And if you keep this going, you're going to maintain that 3-to-1 ratio. 1/3 of 27 is 9, 1/3 of that is 3, and your low risk surgical entry time frame or chart setting is a 1-minute chart. So this is how you achieve your zoom lens effect. Does anybody have a question about that? And if your software, by the way, will not let you create, for example, a 9-minute chart, I regret to inform you that you're using what is, and I'll be as polite as I can, amateur software. Now, I live in Austin, Texas. We have a saying in Texas, don't take a knife into a gunfight. You are out there competing against some very serious traders. A lot of professionals are against you. If you want to be high on the food chain, you don't want to use software that is meant for amateurs. So make sure that you use software that enables you to create whatever settings you want. Now, the TradeSafe system that I wrote with all its automation features is written for the NinjaTrader platform, which is an extremely powerful piece of software, but it also is very easy to use. It has both advantages. Now, I started out on TradeStation many years ago, back before it was even called TradeStation. I was one of the beta testers. However, it hasn't kept up. It stopped being improved in the last century when the Japanese bought it from the Cruz brothers. So if you really want to make things work, you're going to want to use NinjaTrader. Now, if you've got questions about it and its cost and things like that, definitely schedule time with me and I will explain to you how you can get it for free and get free data feed and so on and so forth. So be sure and do that. Now, this is your 3-to-1 ratio, 9, 3, and 1. But I mentioned volatility earlier this evening. I said there has been quite a bit of volatility in the markets lately. And that means that the average true range of a 1-minute bar is typically a lot larger than it normally has been. We try to keep our risk levels under tight control. If you're trading the minis, M-I-N-I-S, those indexes, we've got different exit strategies, and I'll introduce you to that concept later. But one of the exit strategies allows a maximum risk of no more than $100 for each contract that you trade. And if you're going to scalp, for example, the maximum risk is no more than even $70. I can tell you that with volatility, the 1 minute chart is going to be too big a lot of the times. So what we did was we added tick charts to give you additional opportunities to enter trades at much lower risk levels. Now, if you don't know what a tick chart is, again, let's have a conversation on the phone. I don't have time to go into those kinds of things this evening, but a tick chart's just another way of building a bar chart, okay? And by the way, the candlesticks that you see here, I don't use candlestick theory because it isn't consistent enough for my purposes. I only use them because they're easy to see, that's all. Now, what I've just taught you, this formula, you can use this to calculate the chart settings of wide angle, dominant cycle, and low risk surgical entry for whatever market you want to trade. So would you please give me some feedback and let me know, yes or no, do you understand how this works? Do you think you can duplicate this yourselves? Give me a little bit of feedback, would you please, before I go on? I want to make sure that nobody's left behind. Are you out there? Hello? I won't go forward unless somebody types something. I am serious. Okay, are we going to stop things right now? Would you please type that you either do or do not understand what's going on? I need to know you can even hear me. Would you please do that as a courtesy? Okay, folks, then if there's no response, then that means no one, okay, finally. I don't know. Generally, okay, yeah, it is simple enough. Thank you, thank you. My goodness, I don't know what it takes to get a response from you folks. I hope you're actually paying attention. Thank you. All right, let's go ahead and get moving here. I don't want to waste any further time. Your time is precious, and I want to respect that. But you know, we've been talking about trending and strength of trend, but a whole lot of people that talk to me say, Michael, will this system keep me out of chop and congestion? Yes, it absolutely will. And it has two methods of alerting you as to when you're getting into congestion and you shouldn't be trading, and when you're getting out of congestion and you can see if you have a trend. It gives you both audible and visual alerts about when you're in congestion. If you want to look at the bottom of my screen in this screenshot, you can see the colors. Green is when the market was in an uptrend, and then it went blank. That means there was no trend. It was in congestion. And then this little salmon pink color is when it was briefly in a downtrend for a few bars. Then it went right back into congestion and it went blank again until finally it did blow out of congestion and keep going, and that's when it turned green again. Now, people ask me, well, what is that rectangle for? What purpose does it serve? It is there as a visual aid to assist you in anticipating when you will be probably getting congestion. So you plan ahead and think ahead. I don't want people just being caught by surprise. Now, I said it's not only visual, it's audible. Whenever there is a change in trend, say from up to down, down to up, or going into or out of congestion, etc., your computer will actually talk to you and alert you in plain English as to any change of trend or congestion condition. So it doesn't just make a sound, it will speak to you. And you'll be told when there's a breakout from congestion, a fake out and goes back in, and so forth and so on. And it will do this automatically on each and every chart that you have open. Even if that chart or market is hidden and you're looking at something else, you've got multiple markets you're monitoring, it will still talk to you. And when we go to our charts a little bit later, you will actually be able to hear that in the background. My speakers are turned up enough to where when I turn them on, you will hear that. So all this adds up to you're going to be given a clear go-ahead when it is safe to start looking for a trade. But beginners focus way too much on entries. Professionals know that all the money is made on the exits. And I want you to know that you don't need to guess where to get out. Not at all, because our exits are totally predefined. We don't lean on things like Fibonacci or the nearest support or resistance or market profile or any of that stuff because I have not found them to be really consistent. What I use are pre-programmed automated exit strategies that are based on the strength of the trend. Remember I told you about that earlier? Because if you've got a really strong trend, you might want to swing for the fences, to use a baseball metaphor. If it's just a very weak trend, well, maybe all you want to do is bunt and get on base. That would be a scalp. So really, even though I've got 3 separate and distinct exit strategies, it boils down to whether you're going to scalp or scale out. And if you do scale out, that trailing stop will adjust itself in real time, just like you see here. This was our entry from this bar. That bar put us in the trade. It traded above that bar's high where we would have parked our entry order, and we would have taken some partial profit to quickly pay for the trade and reduce your anxiety level. And then we would have been able to trail a profit stop automatically. You don't have to move anything. It does it for you. And then the market, when it starts to lose the trend, maybe it comes back down and backfills or goes sideways, you'll see that indicator automatically adjust itself like a surface-to-air missile, adjusting its rate of closure and trajectory, and you will get definitely the meat off the bone. So this adds up to, this adaptability gives you the highest probability. And what is the holy grail of trading? It isn't the rocket science indicators or even my system per se, it's consistency. We all want consistency. If we're not going to win every time, but if we knew we were going to have a consistent result a certain percentage of the time, that gives you the confidence to go ahead and scale up and build your account. So let's go ahead and jump into a symbolic representation of how this all works. If a 9-minute chart is trending upward pretty strongly, a 3-minute chart is meandering slowly downward, and a 1-minute chart has just begun a very explosive rally upward. Well, they're not in sync. What you optimally really want is for them all to be trending together, 9, 3, and 1, up or down, but you're not going to get that the majority of the time. When you do have trend agreement among your charts, it's usually only 2 out of the 3. So how will you know what to do and what exit strategy to choose? This is how we do it with my own students. I teach them a little rhyme, it's called a mnemonic, and it helps them remember. And it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. So if the 1, the 3, and the 9, and that includes the tick charts, are all trending together up or down, you've got the potential for a really strong move, and you're probably going to get a lot of follow through. And that means you want an exit strategy that'll keep you in the trade as long as possible and milk it for what it's worth. That's scaling out. Now, on the other hand, I said the majority of the time you won't get that condition. If all you've got are just 2 out of the 3 trending together, and it's very specifically the entry time frame and the next higher setting chart, and that would be the 1-minute or tick chart and the 3-minute. If just those 2 are trending up or down together, you have the potential for a trade that you can take, but don't expect it to go really far. It's a weaker, briefer price move most likely, so don't stick your neck out. Just select a scalping automated exit strategy. Okay, if you do this, then what can you expect? Okay, now we would love to have that ruler straight equity curve. I can't promise anything. Remember, FTC won't allow it, but I'm going to show you by walking you through how we arrive at the numbers we do. First of all, if we're going to stick to trading the minis, that was the original example, each of those units of measure, instead of like a share of stock, it's called a contract. Those of you who trade options already have heard that term. So a small trade would be typically 2 to 4 contracts, all right? And if you're going to trade small, you need to have an account size that's adequate. Now, if you're trading the stock market, and I want you to know that this system can be used on the stock market or Forex. It requires minor adjustments, and I'm happy to show you what you need to do. However, it is so much easier to trade things like the minis and currencies or any other things that live in the world of futures and commodities. Why? Because it's actually simpler, cheaper, and even safer than trading the stock market. It costs you $25,000 to day trade the stock market. Wouldn't you like to be able to have only a margin requirement of only $500 for each contract you trade? So if you traded 4 contracts, you'd need a $2,000 account, right? But you don't want to just trade with the bare minimum, because if you lose on that first trade, then you drop down to 3 contracts. So you want to have an extra cushion so you don't trade with your back to the wall. I strongly recommend an account size of at least $5,000. Is there anyone here that $5,000 would be too much for you? Let me know, and I'll address that right away. Otherwise, I'm going to show you how you can actually achieve that 2 to 4% average daily return on your investment, the ROI. Now, that was in your emails, and a lot of people have challenged me on that, but I'm going to show you how really easy it is. If you were to take every trade that the TradeSafe system signals during the day. Now, we're not talking about part-time trading at the moment. We're going to show you how you can achieve 2 to 4% if you took every trade. So that requires you, yes, to sit there for all the trades, Monday through Friday, and you do it for a month. If you add up all of the money you made and deduct the losers, your net profit, and divide it by the number of days you traded, which is typically 20 to 22 days, that's going to work out to about $100 or $200 a day. And if you divide that into your $5,000 account, that's where the 2 to 4% comes from. Now, if you are one of the people who says, I'm not interested, $100 or $200 a day, I need to make a lot more than that. Well, of course, if you've got a larger account size capability, then by all means, you'll trade bigger size. But I'm talking to the ones who can't afford to trade big size, and maybe you would like to be able to afford it. How can you do that? Here's another free thing that I want to give to you. How can you build up your account from a $5,000 account to something much bigger and trade bigger size and do it safely? If you start at $5,000 and you retain the profits, don't take any money out, and wait until it gets up to $7,500. Won't take you very long, you'd be surprised. Then you can increase the size of the trades you take from 4 contracts to 6. You're adding a pair of contracts for each $2,500 that you are building your account. So you started at 5,000, you're at 7,500, and you went from 4 to 6 contracts. And because you're now trading a bigger size, it'll take you a little bit less time to hit that next $2,500 profit. at 10,000, in which case you go from 6 to 8 contracts and you just wash, rinse, and repeat. Now you could keep doing that indefinitely, and I know some of you have already thought about this and said, nah, you're going to end up with an impossible amount of profit or return on your investment. I know theoretically it's possible to make that kind of money, but the last thing I want to do is hype you. So let's get real. Let's take a look at what's most likely. First of all, how often are you likely going to be trading? Instead of all those days, 20 to 22, let's say we cut it back to only around 15 days. Maybe you want to take off and go play golf or do something else, or you got to take your spouse to the doctor. All right, that's 15 days. And instead of trading all day long, we said this can be done part-time. Let's say we cut it in half and you're just going to trade either the morning or the afternoon, whatever that is. So instead of averaging 200 a day, you'll average only 100 a day. Okay, so that is averaging $1,500 profit by the end of a month's worth of trading. $100 a day, 15 days of trading, $1,500, which is over a 30% return on your investment. And of course, hedge fund managers and others, they'd be delirious if they could even come near that in a year, let alone in a month. But you can do it. You can do it even in a week. It's actually been done in a day. So you may already be running the numbers in your head and saying, oh my goodness, I'm going to have an incredibly large account. Why are you selling this thing, Michael? Well, first of all, your return on your investment is not going to look like that. It's going to go up and down because we are not clones of each other. This system doesn't trade by itself. It requires you to pull the trigger. We all have a subconscious. And remember at the beginning of the presentation, I said before I discovered trading nearly 30 years ago that I was a psychotherapist. And one of the things I know is that people will sabotage themselves. They've got comfort zones. And some traders are very aggressive. A lot of traders are, they're a little bit hesitant to take that particular trade. Even though we all might see the same signal, they aren't going to take that same trade. So what about that? How do we deal with that issue? Benchmarking. Nobody in the entire industry benchmarks their students. And if you go to my testimonials and you read on my website about how benchmarking has made a difference, you will wonder, oh, that's why I haven't been able to duplicate what I bought from so-and-so, that guru. It's because benchmarking is going to enable you to take a statistically viable sample of at least 30 trades, and you're going to pick the trades that are the best fit for your personality. Now, how would you know that? Because I already previously had provided you with other tools to track your statistics and to journal each and every trade. Why that trade worked or did not work? Was it because of some kind of support or resistance? Was it a report that came out or some other condition? When you journal, like professionals all journal, you avoid skipping from trade to trade, and instead you're building up a wealth of knowledge that when you finally get to the benchmarking phase of the course that accompanies my system, you'll be able to be calibrated to the trade-safe system based on your personality. So what kind of results have we gotten? Well, the average is around 87% winners. For every single graduate I've had for the last 3 or 4 years since I started tracking this, we've had every one of those graduates achieve at least 87% winners. I wasn't showing them the trades, they did it all by themselves. If you would really like to achieve that kind of a winning percentage, just type a yes. In the meantime, let's go ahead and go to the charts. and show you how this all works because I've been laying the groundwork. I'm going to pause my screen and go to the charts here. And if you've been watching the replay, you're seeing how I'm doing it, but that's okay. All right. Now I need to know that you can see my screen and you can see my charts. Would I please get a yes from you again to let me know you can see the charts? Hello. Thank you very much. Okay, is there anyone who can't see the charts? Maybe I should ask it that way. All right, I'm going to do a real quick tour here. I'm not going to take up a lot of time on this. I have 5 charts here. The 9, the 3, and the 1. Remember, the 1 and the 3 need to agree, best as if all 3 agree. And then also for additional entry opportunities, if the risk is too high on a 1-minute chart, these are my 2 tick charts. Tonight, we're going to be taking a trade on this 1-minute chart. Now, what's on here? Basically, I want you to focus on just this indicator that makes the trend change colors. This is a downtrend officially from here up to where I've stopped the chart at that moment on this 1-minute chart. This 3-minute chart, which was in periods of congestion, as you can see, it went in and out of congestion. And then right at this moment, when the was frozen, it's in a downtrend. So at least the 1 and the 3, they do agree. The 9-minute, though, is not in a downtrend. So I cannot use one of my scaling out exit strategies that lets me exit half of my position at $100 of profit. Instead, I'm going to elect to use a scale out of half of my position at $50 worth of profit. Any questions so far? Type them. I'm going to, because we already have trend agreement, this is the first step out of 4 steps to getting into a trade safe trade. Okay, now what else is down here? I neglected to mention. This is, by the way, as the title says, the alerts log. It's just letting you know what you either saw or heard, and it's keeping a record of all of them, going back in time. Okay? And this is the data box. This is pretty important. Wherever I put my cursor, it gives the readout of not just the open, high, low, close, but also my proprietary indicators, which we'll go into in just a little bit. So I said there were 4 steps to entering a trade safe trade. The first step we fulfilled. We have trend agreement. The salmon pink color is on both the 1-minute and 3-minute at least. So I don't need to look at anything else. I'm just going to focus on the 1-minute chart. So let's maximize this and reduce the clutter and the distractions. So there you have a 1-minute chart window fully maximized, okay? And we are going to get ready for the second step. Now I'm going to walk you through what to expect kind of quickly here so that when I do it, it'll make sense. I'm going to use a drawing tool inside my NinjaTrader and show you that it's already in a downtrend and it's going to go a bit further, probably beyond this point here. And then it's going to trade higher. That's called a pullback or a retracement. It is not going to lose the trend. That's just a brief period of profit taking while it remains in a downtrend. But so many people who have used that approach have complained, well, I've done that, but as soon as I got in, it went further in the pullback and I got stopped out. I sympathize. I used to do the same thing until I developed the precision of retracing to this moving average. Now, it doesn't need to necessarily touch the moving average. Through my own testing, I've discovered that it can actually come pretty darn close on either side of it, either below it or above it, whichever part of the bar is closest to it. That's sort of the sweet spot, a zone of influence, if you will. So we're going to watch as the pullback develops bar by bar by bar until we complete that second step. the last bar in that pullback, the one that is the furthest in the pullback, I'm going to draw a little vertical line here to represent that. That is our setup bar, the one that's setting us up for the trade entry. The range of this bar is going to dictate how much risk we have, because when that bar is just about finished, we're going to park a resting stop limit order, one tick under it. And we're going to let the market trade through it to put us in the trade. We do not use indicators to put us in the trade because they lag. We use pure market action to put us in the trade. So let's say the next bar, or however many it takes, puts us in the trade. Once you're in the trade, automation will take over and you will see another line that represents your protective stop loss order. The distance between your stop loss and your entry is your risk. Now, if this bar is smaller, the distance between these two gets closer, and so is your risk. So you won't risk always $100, as I told you is the maximum for this trade I'm going to take. You could risk a lot less if the bar is small enough. So we'll see how that works out. Now, once you're in the trade, I want you to think that this pullback was like a stretched rubber band. And what you do once you're in the trade is it's like a snapback, and you want to catch the follow through. That's where the money is made. Does anybody have a question about that? Okay, so I'm going to erase all this and go ahead and go into the actual trade. Give me a moment to do that. Okay, now I'm going to turn this on at normal speed, and I'm going to speed it up so we don't stay here all night to about 8 times normal speed. And you will see it start to retrace eventually, just like that line that I drew that was retracing upward. And you will see it getting closer, bar by bar, closer and closer to that dashed magenta colored moving average. See how the bars are starting to come back? And when I get really close, I'm going to slow it down to normal speed so I can point out a few things.
9-minute breakout reset.
Okay, you may have heard something in the background, and that is those audible alerts that are always going off no matter what is going on. So I'm getting ready to slow things down here. Okay, now I'm going to pause things at this moment. This is the second step for entering a trade safe trade. You must have a minimum number of bars. I'm not going to disclose that. That's part of the system. And you want it to be at a very direct angle, if whenever possible, typically 45 to 90 degrees. You don't want it to just meander around. And I told you it either can touch this moving average or get very close. Well, I don't want to eyeball things. I want more precision. And that's why I created an indicator that is constantly gauging how close each bar is as it develops, tick by tick, as it gets closer to the moving average. So like this bar here, when it was finally finishing, look down in this data box. I'll bring it up a little higher so you can see it, where it says Rule 21. There you go. It says it is 3 ticks away from that moving average. Okay? This bar here, the readout says 0, so obviously it's touching. And this last bar, which is the furthest in the pullback, is also 0, so it too is also touching. Okay? So we are so far fulfilling the second step. Now, I don't want to put all my eggs in just the one basket of a pullback to a moving average. I would really like some additional confidence that comes from some other method of calculating whether that pullback has reached its maximum point of excursion. So I want to use something that's totally uncorrelated, and that's this oscillator down here, the red line. It's part of a family of oscillators. I'm not going to say which one it is because I've reprogrammed it. And all it needs to do, obviously, like any oscillator, is get into overbought in this case. Well, it is. It's above that line, okay? So it does not, by the way, put you in the trade if it turns out of overbought. All it needs to do is just get into overbought, and that third step, that third condition, has been satisfied. So now we're up to 3 steps. How about the 4th step? Well, I told you we want to keep our risk under tight control. I'm going to wait until this bar is nearly finished because it could grow a lot bigger, right? And by the way, while I keep my cursor off to the right, I want you to look right here where the risk is. Right now, the risk is only $30 per contract, and down here in the corner, with 24 seconds left, we know that bar still has some time left before it closes. So what I'm going to do is turn this back on and wait for the final 3 or 4 seconds, and then I'll pause it because that's when I normally park my order, about 3 or 4 seconds before the close of the bar. Don't wait for it to close because you might miss the entry. So it's got about 9 seconds, 8, 7, 6, 5, 4. Let's pause. Now, if I put my cursor off to the right, the readout says the risk on that bar with 3 seconds left is $45 per contract. Folks, that is a very small risk. And you may say, oh, those stops are too tight. How can they be if we're achieving close to 90% winners? That's because we have found that sweet spot and we have the precision to repeat that reliably. Now, how do we put our order in? For those who have ever day traded, you're probably familiar with the DOM. D-O-M stands for depth of market. It's a small window like this one that floats above your chart, and it has an ascending and descending column of numbers for the bid and the ask. Not really intuitive, and it's very old-fashioned. It's so 20th century. This software lets you park your order directly on the chart. So see my cursor? Right now it's lined up with the bottom of the bar. I'm going to drop it down 1 tick under it. That's where I want to park a stop limit order so I get 0 slippage. I'm going to right click and a menu is going to pop up, and I'm going to ignore all of this other stuff and just focus on this group right here because they'll always be there, and always the last choice. Always the last choice. So it's real straightforward. It's letting me know I'm going to sell on a stop limit for contracts at that price. So let's go ahead and click on it and listen to my computer. You should hear it talk to you.
Order submitted.
If you could hear it, type a yes. Let me know. If not, I'll turn it up. And this is a very graphical, visual way of knowing exactly where your order is. So intuitive, so precise. If you decide you didn't like it, you can kill it by clicking on the X. Right here, it's letting you know with this label what your order is. So it's real obvious you're selling 4 contracts on an SLM, a stop limit order. Okay, so let's let the market put us in the trade. We have fulfilled our 4 easy steps, real straightforward. And this is up to you. At this point, you can say no to the trade or yes to the trade. But I'm going to go ahead and just turn it on and speed it up a little bit.
Order filled.
And then I'm going to pause. Some automation just kicked in. Going forward, you're going to see probably 95% of all the actions will be automated. That's because you just can't move your mouse fast enough in current market conditions. This takes care of it. It's pre-programmed. First of all, we have what is called an OCO bracket order. One cancels other. Here's our target below where we entered. This line in the middle is where we entered, one tick under our setup bar. This is our $50 target, where we're going to buy back half of our 4 contracts. Buy back 2. Real easy to reach, pay for the trade quickly. Now our stop is up here at a full $100, but remember, it says if you put your stop 1 tick above the high of that bar, your risk is only 45. So here's what you do. Just drag it down and park it. Now you have the distance from here to here is a $45 risk. Any questions on that? Okay, so the next thing that you're going to see is going to be almost too fast for you to keep up with because it is automated. This line, which is our target, is where we want to scale out of half of our position, but it also does something else. At that same price level, automation is going to move your stop from where you could have had a full loser. It's going to cancel and replace it and park it at where you entered, plus 1 more tick of profit to pay for your commission in the event that maybe you didn't get a fill. Maybe you didn't scale out, but at least your stop got moved, and if you go back up, you don't let a potential winner turn into a loser. At least you would make $20. $5 a tick, 4 contracts, 1 tick of profit for each. That's $20. So let's watch it and see what happens. I'm going to turn it back on, speed it up a little bit more.
Target filled.
Target filled, said the computer as I pause once again. And I told you it was awfully fast. The red line disappeared from up here and reappeared right here at 1 tick of profit. It also, because we hit the target where the green line was, and that's why it's gone now, and we've made $50 in closed profit. That's in your pocket. You can relax. That's a paid for trade for sure. But you don't need to protect 4 contracts anymore. Automation did one more thing, and this is something TradeStation cannot do. It canceled and replaced that break-even stop from 4 to 2 contracts. But we hope that this does keep going, and you do want to see how a trailing stop does work, don't you? So let's turn this on, and I'm going to let it speed up a little bit, about 15 times normal speed. And then I'm going to pause for a moment and show you how we associate our trailing stop indicator, that's this dot right here, with the actual stop. Because it's back here now, it has to catch up and then go past it. And once it goes past it, it's going to drag that stop with it. Here's how you do it. You just go through a little menu choice and associate it to the indicator. So we just go here, associate it to it, and we give it a 2 tick offset because I've found in my own testing that quite often price will touch that trailing stop indicator and then keep going. So I use an actual offset, and you'll see how that works a little bit as we get into the trade. So let's turn things on. And I'll speed it up even more to 20 times normal speed. And this trailing stop indicator is going to hang way back as long as there is good, strong.
3-minute congestion cancel.
Okay, there was my 3-minute chart. Oh, look, we got almost tagged right here. But if you would have been trading it yourself, you might have been tempted to jump out. But with an automated trailing stop, see how it keeps adjusting itself with a 2 tick offset here? As long as price keeps dropping, it's going to hang back and give breathing room. But if price starts to level off, backfill.
9-minute breakout confirmed.
Okay, it's letting me know that on another chart I'm getting something going on, but nothing to worry about. Now it's going to tag that indicator in a moment. There, it did it, but I want to reassociate this with a 2 tick, so it keeps doing what it's supposed to do. So let's reassociate it. And click OK. Now, keep your eye on that and watch and ask yourself, would I have jumped out at any of these points along the way based on the way I think the market should trade? Well, right now it's about ready to go sideways or backfill. I don't know which, but it is locking in more and more profit. See how close it's getting to the price action? Oh, but we're dropping yet again. So if you thought that, okay, now it got out. Now watch what happens.
1 minute, new congestion.
And you just heard the computer say 1 minute, new congestion, and sure enough, you're being shown that we're in congestion. So we actually, starting up here with this setup bar, we entered right there. We exited half of our position. Let me see, with a Control E, I should be able to show things. Hang on. There you go. You can see these little arrows. These are showing me where I entered the trade and scaled out of half of the position, and then down here is where I exited the other half of the position with the trailing stop. So you're seeing the automation that you can enjoy whenever you use scaling out. Now, obviously, if you scalp, it's all in, it's all out, it's only a few ticks, and you'll quickly make, if you're just scalping with 4 contracts, you're going to make a quick $100 quite often in just a minute or two. So that is 2 of the 3 exit strategies. So each one is tailored to the strength of the market's condition. So let's look at how much profit we made. I'm going to open up this hidden panel that shows the profit and loss. If it's covered up by the GoToWebinar control panel, I'll just read this to you. It says $820 worth of profit. So my question, as I ask each time, is simple. With this kind of automation, this kind of precision, this kind of consistency, no, you're not going to make 820 every time, but the main thing is that if you can achieve nearly 90% winners and have it be this easy, would you like to have this in your toolbox? Just type a yes if you think that is something that you would like to use, because it is so straightforward and easy to use. Now, while you're typing, I'm going to go ahead and close this data box and go back to the presentation to wrap things up. And you should be able to see the last slide where I was. Okay. And thank you for that, Damon. Are you all able to see the slide? Give me one more yes. Let me know you can see the slide and not the charts. I want to make sure that the transition was good. Okay. Oh, you must have really come in late, Ascenta Trader, because I've said quite often at the beginning of the presentation, and thank you, Benjamin, I said you can use this on any market. I don't care if it's futures, commodities, the stock market, ETFs, or Forex, doesn't matter. Okay, did that answer your question? I just use this as an example trade because I'd rather go into more detail on how a trade works rather than just jump around and show you a whole bunch of trades on different markets and then you don't really learn anything. All right, let's continue on. The Trade Safe system is a trend following system. It is the safest and most profitable way that you will be able to generate income as a day trader. Now, if you came in late and you've got objections to day trading or doubts about it, you will be able to watch a replay and I address that so that you'll know that actually you really can do it on a part-time basis without any of the hassle or concerns you might have had. Now, this is all possible because we used multiple time frames, multiple chart settings, and each one is tuned based on cycles or ratios. like that wide angle lens that I showed you at the beginning of the presentation. We use that in order to gauge not just do we have a trend on each of those charts, but how many of them agree. Remember, the 1 and the 3 need to agree, best as if all 3 agree. That dictates which exit strategy you want to use, scalping or scaling, basically. And by choosing the appropriate exit automated strategy, you can adapt to what the market is capable of giving you. And of course, you notice during the trade, my risk wasn't even up to the maximum of $100 per contract. It was only 45. So we're going to keep that risk under really tight control. And you did see the automation. This is almost totally automated. The only parts that are not are basically the steps leading up to you getting to be a choice in the matter about pulling the trigger and taking the trade. Because this is just like a flow chart. It is a Boolean logic, rules-based, true mechanical trading system. Not like a lot of other vendors call their stuff a system. They're just using marketing hype. This is a true system. And you will use actual precision to get into the trade with 4 simple, direct, easy steps. Determine the trend. I showed you how to do it with the color in the trend indicator. The 1 and the 3 need to agree, best as if all 3 agree. And once you have that, then you pre-select your exit strategy and look for the second step, a pullback, a retracement to that moving average plus or minus X number of ticks. The readout in the data box will let you know tick by tick, moment by moment, as you are getting closer and closer. And then you have independent uncorrelated confirmation with the oscillator getting either overbought or oversold. And last of all, you saw with the indicator the risk. You know exactly how much you're risking. You won't be taking a trade if the risk goes to be too much. You'll see it for yourself if it's too much. You just say, oh, too much, I'm going to stand aside. This leads up to true consistency, which is the real holy grail of trading. And we provide you with an actual roadmap to winning. Not just this software, this system. We know it goes beyond that. Too many people have just bought some software, had a little bit of support, and were turned loose, and they weren't able to replicate what they saw in the presentation. You will have a full 90-day period of my personal coaching. Now, does it take you 90 days to learn? Oh gosh, no. This is a self-paced course. You can finish it in far less than 90 days. I've taught an 8-year-old kid how to do it in under a week. So you can certainly learn it also. So, will I be there for you? Absolutely. I'm going to be in your corner as your personal mentor and coach. I'll explain how that works, but it's basically you'll be in my trading room, and this is not going to be with hundreds of people where you're trying to compete for my attention. At most, there will be maybe 6 or 7 people in there at a time because I'm very selective about whom I accept into the program. And if you want my attention, you don't need to type. You can use a headset with a microphone and talk to me anytime you want to, even in the middle of a trade, and say, why did you do that, Michael? And I'm more than happy to answer any questions you do have. Plus, to ensure that you are doing things absolutely correctly, I do something else that absolutely nobody else does. I can actually watch you take a trade and coach you through any particular problems you might have. So as you see, this goes well beyond anything you've ever seen as far as additional support. So if you're really ready to cash in, let's run through all of the value that you will get in this package, not just the software, because there are only 6 or 7 other true mechanical trading systems out there on the whole planet today. The cheapest one is around $3,000, and they go well beyond $10,000. None of them have all of the assets that you're going to have included in this package. Now, if I were to just price my system at the low end, and I'm not going to, don't worry. Let's start at 3,000 and go from there. You're going to have me as your personal coach and mentor, not just in the trading room, but also you have full access to me offline. That's right. You can schedule up to a full hour with me offline on the phone, or even in the trading room by ourselves if you need to. Nobody else does that. And I get at least $500 an hour for my corporate clients. You've got full access to me as much as you need during the entire period of support. Now, to get you off to a real good, solid start in our custom designed members area, it's password protected, it's yours for life, and everything in this package, by the way, is yours for life. You do not have to pay an extra penny next year to keep it going or anything like that, okay? We get you started with special printed material, video training tools, etc. Plus, when you are ready to get started with the charts in your Ninja Trader, we provide you with downloaded custom workspace and charting templates. It's a 5-minute operation to install our software. And if you say, oh, I just don't think I can do that, Michael, as simple as you say it is, I need help. Well, guess what? I have a full-time support staff. I'm not a one-man band. I have a full corporation and training staff, and my guy will remote access into your computer and help you get everything set up exactly right if you have any doubts whatsoever. Now, you saw me use that trend indicator. Separately, you would have to pay at least that much if you were able to buy it, but it's included in the Trade Safe package. So you have got that. And all of the 4 steps with the special proprietary indicators that give you feedback along the way to let you know when you do have a legal, true setup, that's definitely worth its amount, because you gotta know without doubt this is really a legal setup I should take. And once you're in, you saw the automation on my trade. Well, I've got 3 different exit strategies, ATM, automated trade management strategies, and you get all of those. They definitely have value separately. And when you finally reach the end of the course and you want to be benchmarked, do your 30 trades or more, typically my students will rack up at least $3,000 to $5,000 worth of profit. So that gives you a strong indication of what you can keep on earning after you graduate from the course. Now, of course, when you are in my trading room, I record everything. That means everything I say, you say, my charts in real time, yours or some other student's charts if we share the screens. It's all there, and I've got archives going back years. So that's extremely valuable so that you can always brush up on whatever you think you might have missed. Now, I want to make sure that you run your trading like a real business. Don't be an amateur. If you want to be high on the food chain, you've got to run this like an actual business. So I give you an actual authentic business plan, not just to map out your goals, but also to put guardrails on your trading, like what's the most I'm willing to lose in a day, a week, a month? How many losers in a row will I tolerate? What will I do if I hit that? You got to put it in writing and submit it to me, and I review every single business plan and give you feedback. Now, to make sure that you keep right on operating this like a business, I give you a fully macroed spreadsheet for tracking your performance data. And on a trade-by-trade basis, just like I told you earlier, do as professionals do and journal each and every trade. I give you a pre-formatted journal so that you will be able to annotate exactly why a trade worked or didn't work, so you can learn from your performance instead of just jumping from trade to trade. And last but not least, remember, I was a psychotherapist in a past life, so to speak. I have a very powerful tool that will help you neutralize that self-sabotaging behavior and forge diamond hard discipline. So when you add it all up, you've got close to $11,000 worth of value. Am I going to ask you to pay that? Of course, you know I'm not. Normally, what we do have people pay for this package is $39.95, and I've had many people say it's absolutely worth it. I earned it back in my first month or so easily. But I'm going to give you folks a very special limited time offer. That's right. I'm not going to pressure you in any way to push a button and buy right now. I don't believe in that. I'm going to give you a full week to think about this, to talk to me, to consult with me, get your questions answered up until midnight of next Wednesday. That's midnight Pacific time of Wednesday of next week. If you decide to go ahead and go forward and join the Trade Safe family and acquire this package, it's only $19.97. And that is far below anything else on the market today that is even close to comparable. So if you're ready to get started, you're going to want to know if you qualify. So you do want to book that consultation. You'll get a link in the email following this presentation that lets you see my calendar. You can pick the best date and time and schedule time with me. And as I promised you before, it will not be a sales call. I will just answer your questions candidly so that you feel your time was well spent. Now, for those who think that 1997 is still something that makes you hesitate, I do have payment plans, several of them actually. So yes, you're going to have a full week, but I do want you to consult with me. But here, if you are ready to jump to the head of the line and look at that calendar and get yourself in before anybody else, because they do fill up fast, write this down, daytradesafe.com/apply now. You will also get a link to it in the follow-up email. So once you do talk to me, what happens? Well, I do want you to book it pretty quick because they fill up fast. I want you to know that you will have locked in your discount, because if it fills up fast and the deadline passed and the earliest you could get to see was the day after, I'll honor the discount. I'm not going to pressure you. Now, you're going to have to call me. You will be provided my phone number, and please do keep the appointment. Okay? I'm taking a full hour out of my day that I could be trading or helping somebody else. So please don't make an appointment and not keep it. You will be given lots of reminders, follow-up text and emails, etc. So please do that. You'll have a very valuable conversation. You'll get all your questions answered. Bottom line is, I want your confidence. Now, I said payment plans, plural. If you're a U.S. citizen, I strongly encourage you to consider selecting the PayPal credit option. Now, there are several buttons when you go to the sales or order page eventually. One of them is you can just go ahead and click and use your credit card, and that's fine if you want to pay in full. But I recommend the PayPal, same as cash. How it works is this: when you click on that credit button that's gold, pardon me, it will take you to the PayPal portal. Even if you don't have one of their accounts, you don't need to, put money in it or do anything. Just takes about a minute or two to set it up. And then you do what is called a soft credit check. If they like you, they will give you up to 6 full months to pay them back. What they'll do is they'll pay me up front, but then they will give you 6 months to pay them back. And you can do it at your own rate, however often you want to, but as long as you pay them off at the end of 6 months, guess what? Free money. You don't pay any interest at all. Of course, if you go past that, they will charge you interest just like a credit card would. Now, if for any reason this is not a good fit for you or you're not a U.S. citizen, I do have other payment plans available, and of course I do have to charge interest. So I do want you to book that call. Get your questions answered, folks. Really, you will find that it is really valuable. You'll find out whether this system or even day trading in general is a fit for you if you've ever wondered about it. So erase all your doubts. Go to daytradesafe.com/apply now. Now, you will also get the best date and time to talk to me. It fills up fast. I won't pressure you. Be sure and watch this replay if you came in late, because I can't recreate it in a phone call. I need you to know what happened during this presentation, okay? And there is always just one person in the group at least that knows already, this is really for me. Maybe they've even seen this presentation somewhere else, somewhere before. If you're that very special person, you don't need to wait for any emails. You can just use this link, daytradesafe.com/I want in, all one word, I want in, and it'll take you straight away to the order page, and you can go ahead and complete it, and you will be already this evening getting your materials to start the TradeSafe system. So does anybody have a final question? One last question before I let you go. I hope you feel your time was well spent. I appreciate you very much sticking through all this. I know it was a long presentation, but I wanted to be thorough and answer as much as I could. So nobody has any questions. Definitely please schedule time with me. I really do encourage you to do it. So right now I want to say thank you very much. Use that link. Schedule time with me, and until I get to talk to you, I want to say to you, trade safely. Bye-bye.